Hey there, listeners, and welcome to the Dairy Monday Market Watch. This podcast is put on by Cornell Cooperative Extension's North Country Regional Ag team. I'll be your host. My name is Kelsey O'Shea, and I'm the Farm Business Management Specialist here in Northern New York. Each week, we're going to talk with a market specialist about what's happened over the past week, what's coming up ahead, and how these events may impact your business. So be sure to stay tuned and check back with us each Monday. If you're not already, make sure you follow our YouTube channel. We are CCE North Country Regional Ag Team, or follow us on Facebook to see these updates. This week, our market specialist will be Anup Singh. He will be much better at giving his background than I ever could, so I'll turn it right over to you, Anup.
Thank you. Thank you for having me. So my background is, my name is Anup. I am married into dairy. I met my beautiful wife in Houston, where I was working in the energy business. So was she. And her parents are dairy farmers in Vermont.
So you got your introduction to dairy from your wife. How did you transition that to your professional career?
So I came home and my brother-in-law said, hey, you work in the oil business. Can you help us manage the price of diesel? What does 2 cents change in the diesel price do to your gross margin? And naively, I thought everybody should know the answer to that. It's only later I realized that it's a difficult question to answer because you need a lot of information, and farmers love farming way more than they would like to follow prices. And that's sort of what got me sucked into dairy. And the more I dug into it, the more I thoroughly enjoyed it, to the extent that I left my career in oil and energy. And I moved halfway around the world to Singapore to work in agricultural markets. I worked a lot in palm oil and soybean meal, understanding just how agriculture actually worked. I could not find anybody in the US to give me a job in ags. There was a company in Singapore that offered me a job, so I moved to Singapore to work there. 2015, Gretchen moved back to Vermont to spend time with the family. I commuted for a year between Singapore and Vermont, and then I went to work for Agrimark as in hedging and risk management. I was there till end of 2017, because I realized then is that the skills that I have and skills that I've picked up and how I can employ stuff that I know for a broader group of people and businesses. Right. I could do that by working for myself. So I left Agrimark and I started working with some farmers up in the Northeast. And at the same time, I got an opportunity to be an intern in New Zealand, in Fonterra. So I just thought that would be such a cool experience to get to understand how the world's largest dairy cooperative works. More importantly, how do the global dairy markets actually work? And that was a phenomenal experience for me to sit in that business and guide their risk management trading team on how prices relate and how prices behave and how macroeconomics works. That's really what I do, and I help people in the commodity markets make buying and selling decisions. That's my background.
We will jump right in. We have a few questions that have come from mostly farmers that I've been talking with in the last 5 to 10 days, given everything that's going on. So we're in the middle of a global pandemic. In the Northeast here in New York specifically, we are being hit particularly hard due to the large concentration of people in New York City. So we have the highest number of cases of any state in the US and everything that goes along with that. So with all of that going on, markets have done some crazy things. So what I will ask first is, what do you see as the demand for total milk within the next 6 to 12 months? Sort of, we'll put it regionally here in the Northeast, knowing that everyone is social distancing. A lot of people are in quarantine, although New York is the epicenter right now. It seems to be spreading across the US, all those factors being considered. What do you see the demand for total milk and milk products within the next 6 to 12 months?
Good question. What we'll do is, off air, we were chatting and I said, I'm going to use some round numbers. So please fact check, and I'll probably be wrong. And I like to use round numbers because when somebody says demand's down 14.29%, I have no idea what that means. I understand directional, up, down, thumbs up, thumbs down kind of thing. Yeah. I do look at a lot of numbers myself to build a picture on how to deal with it. So we'll talk some around big numbers. We'll also talk some concepts. very important. It's more important at these times than other times to understand that flow a bit. At a broad level, and you in this community know way more about milk than I ever will. I hope to catch up in one of these days. But what I'm also saying is that anything I'm going to say today is not even a tenth as complex as the work that you guys do. So nothing I want to say is complex. Just many moving parts. It just makes it tedious. So demand for milk. So demand for milk at a broad level, we should think in terms of fluid milk. So
Okay.
stuff that we buy in grocery stores,
Yeah.
cheese and butter. Right, those are the three families in which milk demand occurs. And I will put yogurt and things, semi-fluid things as a part of the fluid thing, just for simplicity's sake. Right now, the demand for food, meaning number of mouths to eat, that's the ultimate demand. So if I was consuming 2,000 calories before the pandemic, I'm consuming 2,000 calories even today. The calorific demand has not changed. I would even argue that the calorific demand has gone up a bit. And it's gone up a bit. If you add up all deaths, I think we have less people dying now than people who were dying before the pandemic became a pandemic. Think of this a little bit more as an arithmetic accounting problem than a human problem.
Right.
Meaning the number of people dying out of road accidents is zero or close to zero.
Right.
Right. I've not heard a single person getting shot in Chicago. No gunshot deaths because nobody's out shooting guns at anybody because everybody fears nobody can get out of the house. Right.
Right.
Number of mouths to feed is the same, if not slightly more. Right. So calorific demand and calorific demand, I think, has not changed. In fact, it's gotten slightly heavier, I would say. Now, so that's the ultimate demand part of it. Now we peel back a bit.
Okay.
So the mouths to feed exist. Where are they going to eat? Now, if you take not in the rural America, but if you take the urban side, which is a big consumer of the products that we produce in dairy, right? So we do 21 meals a week, right? 3 meals a day, and 3 times 7, 21 meals. I would argue, and I've tested that on myself, and in the last few weeks, we've all had to do a lot of testing on ourselves on assumptions and things like that. And I'm go through some funny examples in this conversation, but so testing assumptions is off the 21 meals, roughly on an average, every working person, not a household, but every working person eats 5 meals out every week.
Wow.
Right?
Okay.
Yeah, 5 to 7 meals is meals that people go to the restaurants to eat.
Wow.
Right? That's a huge number. Working people, we're not saying kids, we're not saying anything, people stay at home, but we're saying the workforce, by and large, 5 to 7 meals they will eat out. Those mouths that were going to the restaurants to eat now are going to the grocery stores to eat.
Yeah.
The restaurants are closed. So you think about it, 60, 70%, again, round numbers, 60, 70% of US meat production is consumed in restaurants.
Oof.
Remember 2-3 weeks ago when all this happened and the shutdowns were happening, there were 2 things flying off the shelf. We'll joke about toilet paper at the end, but there was no meat in the grocery stores. And there was no meat in the grocery stores because those mouths that were eating 7 to 8 meals outside, that meat demand came to the grocery store. Let's say if I was eating, let's say, a hunk of steak at a steak joint, or I was having burgers at McDonald's or Burger King, I'm not going there anymore. I still need to eat. So I'm going to the grocery store and buying meat. So the meat was gone. So the supply chains in the back had to adjust, go from large cuts and big packaging to small cuts and small packaging to get to the grocery store. Right? Okay. Same as the case with milk. But the case that I'm trying to paint is that food demand is in retail, which is grocery stores, and then food service, which is a big chunk of restaurants, takeouts, deliveries, anywhere the food is prepared outside your home, that's food service demand. So the key thing to note is that the demand for dairy commodities, cheese, butter, milk, in the in the retail segment, which is grocery stores, is up, should be up, and will constantly be up because that's where people are going to buy food. What has changed is the form in which those commodities are being consumed.
Right.
So let's break that up a bit. So let's start with the easy one first, which is cheese. We produce slightly over 1 billion pounds of cheese a month.
Okay.
That makes it 13 billion pounds of cheese a year. Right? Round figures, 13 billion pounds. I'm sure I'm off by multiple decimals. But now, of that 13 billion pounds, the broad breakup is we produce 5 billion pounds of cheddar, 4 billion pounds of mozzarella, and another 4 billion pounds of other stuff.
Okay.
Now, 30%, somewhere there, a third, easy numbers, a third of the cheese sold in a third of all this cheese that I just talked about, 13 billion pounds, is sold in grocery stores as cheese. So when we go buy slabs of cheese or shreds or balls or this or that, so 30% of cheese that is sold as cheese in grocery stores. There's cheese that is sold in the grocery store in food as well. So when you're picking a pasta parmesan, frozen meal, frozen pizza, many other things, there's a bunch of cheese in there as well, right? Now, at the moment, we've and a friend of mine who's a fantastic dairy analyst, and he's a prickly Aussie who lives in Melbourne with the worst attitude. So he and I've been doing a lot of work the last 2-3 weeks, is estimating, hey, what do we think is the cheese that is sold in the grocery stores, not as cheese, but as cheese and other things. And while we were not able to come up with a definite number, we felt that maybe let's another 15-20% that is sold in the grocery stores. So 50% of cheese production, we feel, should be intact. If not, that cheese should be flying off the shelves, because that's what people are eating. Cheese is probably getting used more in snacking. Previously you would go eat a bunch of junk food, and now you're eating, you can use cheese as snacking. Now, of course, I also think that there's some surge buying that also has happened. Just like toilet paper flew off and chicken flew off and all of that. I'm sure, milk has been flying off the shelves. It's akin to having a snowstorm that hasn't ended yet. Right. So snowstorm, we all go over buy milk. The question is now, what is happening to the other 50% of the cheese? Right. So of the 4 billion pounds of mozzarella that we make, 4.5 billion pounds of mozzarella that we make, guesstimately, it is safe to assume that 80% of the mozz that we make goes on pizza. Oof. Yeah, that's a lot of pizza. Yes, a lot of cheese. But you sense check it, and the sense checking is you convert all of the cheese that we consume in the US per month per person. Now, we have 350 million people in the country. Not all of them, there are kids in there, and there are adults, and there are people who are lactose intolerant. Right. So if you take roughly 200 million people, let's say they consume cheese, it's not a whole lot. It's like 2-3 pounds, 4 pounds a person per month. So that's doable, and that includes all sorts of cheese in all forms. Then the question is, what has been shut down? What has been shut down is all the eating establishments. Anybody who was going to a restaurant cannot go to a restaurant. They can do a takeout, but they can't go to a restaurant. So the food service demand, there were 3 venues broadly where food service demand or this prepared food demand existed. Restaurants, and what we mean by restaurants is think of McDonald's and Burger King also as restaurants. A reference, we don't think of them as restaurants, or they're just a burger joint, right? And restaurants like Olive Garden, but they're all restaurants. Because that's a place where you are making somebody else cook and you're using somebody else's kitchen and dining space to go eat. Those things have all been closed. Pizza as a business was designed for a takeout and delivery. Yes. Right? By and large, broad America, we don't go to a restaurant to eat pizza. For the most part, that demand, now there could be some shakiness in that, but I think it will move cheese and it will move tonnage. Whether it happens today, tomorrow, a day or two here and there, I think there's things to be debated about that. Okay. But I think that demand still stays. Now, the demand, I think that gets impacted, or that has already been impacted, and we should also put in the word destroyed permanently until things open up again, and is wastage. You see, when food is eaten in restaurants and food service business, there's some wastage. Right. Some of it is spoilage, some of it is wastage. I think when things go to retail 100%, or as we are seeing in this scenario, I would imagine that wastage is reduced to a great extent. There is some offset for the wastage, meaning we overbuy and then it spoils, so we may want to go buy again. Right. But I somehow feel that overbuying and wasting that is much smaller than the wastage that happens in the retail, in these food service and restaurant channels. And I think that roughly, I would say that we have lost 5 to 7% of the cheese demand. Then cheese, in our context, also gets exported to various countries. And the largest buyer of our cheese is Mexico.
Okay.
And the largest buyer is Mexico because it's easy to send, right? Just across the border, just no ships, nothing involved in that.
Right.
Now Mexico, one of the big sources of income in Mexico is energy. They sell oil, they sell natural gas. Now, again, what we're saying is, mouth to feed versus earnings. There's a difference between the two. So
Right.
there's demand. What's also happening is the Mexican peso, the currency, has fallen significantly. Peso is probably one of the first very weakest currencies today. If you think about the merchant who's buying cheese to take it to Mexico to sell and put it in some format and sell it, his revenue is in Mexican peso, his cost is in US dollars. So when his revenue pricing drops because that Mexican peso fell, he's going to buy less. That's a given. But what's also happening is in the most immediate term, he's probably not buying for 4 weeks of supply anymore. He's
Right.
probably buying a weaker supply at any given point in time.
Right.
So previously, when the price would go low, we would see Mexican merchants come and buy 4 to 6, 7, 8 weeks of supply. At the moment, no matter how low the price gets, the guy is only buying for 3 days, 4 days, 7 days at a time. To add to that, what's also happened is last weekend, and this is still not clear to me what the actual administrivia behind this is, that in the border, the administrative border is closed. In the sense that if people needing new permits to take product across the border and
Right.
back, now that is there's some issues in that, which basically will tell us that, and as we've seen in the CME cash market, that there may not be any buying happening in the CME cash market
Okay.
because the buyer who was buying cheese to take to Mexico may be on pause for a little bit. If Mexico shuts the border, or you say US says we shut the border, I think we in the US have a bigger problem with shutting the border than the Mexicans do. Why? Because I lived in Texas for 12 years, and I think Mexico feeds Texas. So all the vegetables in the grocery stores and all, they're all from fresh produce of Mexico.
Right.
So if we shut the border, well, the Texans don't have food to eat. That's a problem. So I don't think the border shuts down. What I'm trying to say is that let's put some common sense into that. Is that that's not shut down.
Okay.
So cheese, by and large, I think we feel that cheese, it will lose some business. Domestically, the wastage is going to stop. And when prices become tight and the currency falls like this, I think there's less wastage in our importing countries as well.
Okay.
People on the ports handling logistics issues, not everybody available. Trucks can't get loaded, trucks can't get unloaded, things like that. Now, the other destinations for our cheese is is Japan and Korea. And I think those markets, we should assume that that's not going to be any cheese buying for the foreseeable future until, the situation there ease out a bit.
Okay.
Japan and South Korea are the countries that have been hit the worst at the moment with the pandemic. When we compare cheese to butterfat, I think cheese is a much glorier story than butterfat is. Butterfat, I think, has the most amount of headwinds on it. So why is that? So if we think in terms of butter, it's slightly better. We start thinking in terms of cream, and it becomes a worse story. So you see, the commercial production of butter is largely salted butter. Now, if you're a cake maker or a pastry maker, you don't use salted butter.
No,
right? So you will use unsalted butter. The easiest access to unsalted butter is cream. So when milk is flying off the shelves, and not everybody buys whole milk, so people are buying 2%, 1% skimmed milk. Where is all that cream going? That cream is now flooding the market as well. So there's way more cream in the market today than it has ever been in the past. And now, previously, the buyer of the cream was the cake maker, the pastry maker. And why does food in the restaurants taste so good? Because it's made in butter. And all the restaurants are closed.
Yeah.
So so I think butter, the story in the butter side, if you think in terms of just butter, about 30-35% of butter made in the US is sold in grocery stores and bricks in those, the blocks of butter that we buy.
Right.
70% is sold in bulk and has bulk applications. Now you add to that the cream that was never made into butter, but is underlying butter fat in butter equivalent terms is roughly another 20-30% of butter equivalent, right?
Yeah.
So it's a big hit. It's a huge hit.
Yeah.
And hence you've seen class 4, take nosedive is an understatement. It just fell off the cliff,
Right.
right? And I think for that segment to find a bid or a buyer is probably going to be the longest path to recovery on that one.
Okay.
So butterfat, I mean, the way the rate at now, every ounce of cream that will be found will be converted to butter before it is dumped someplace. Now, more we convert into butter blocks, we are adding to the mountain of butter. So we sort of magically find ourselves way back in the 2012, 2013 time when we had a lot of butter.
Oh.
Right?
Okay.
So we're going to build this mountain of butter. There's a mountain of butter already building in Europe. Now, so there is that building problem of butter that currently occurs. Then that leaves us with non-fat and or dried products, if you will. So any surplus milk will go to the dryer, and it'll get converted to whole milk or skim milk, whatever they can convert it to.
Right.
And I think the co-ops and the manufacturers are going to do their level best to take every ounce of milk that they can and convert it into something that can be stored.
Right.
So that's the most economic thing to do, is to convert things that are being produced to a form that it can be stored and can be used at a later time.
Right.
And I think that will get maxed. And that's now in the near term, when supply or inventories of these things build, what's also happening, you think about it, is that now more than any other time, the need to convert inventory to cash is the most important thing, right? How is a business going to survive and pay its people if you're sitting on inventory that is not cash yet?
Right.
So then it'll have to get sold. And hence you see the lower prices being offered in the market to keep moving this inventory to convert that into cash so operations can be funded.
Right.
Right. Now, when the stimulus makes it to helping manufacturers with working capital and all that jazz, I have no idea. I shouldn't say I have no idea. It hasn't happened yet. I hope it happens very quickly. What that will solve is maybe the working capital problem. What it may not solve is the need to keep converting that inventory to cash, which is what brings that in the market. Now, so far, I've painted a very doom and gloom picture.
A little bit.
Yeah. Now, I was talking to a young farmer last week, and he said, "So, Anup, what happens when the apex of this pandemic goes from New York to your city, meaning Chicago?"
Yes.
Although at this time, my wife and I would kill to be in Vermont. Yeah. So what I was talking to the farmer was that, look, that's one way to think about it. I said, can you tell me a restaurant that's not closed already? Okay, right. So yes, apex will move, deaths will happen, but everything that had to get closed, for the most part, right, is closed. It's closed. Kelsey, we'll do a little trivia game here. How many people on April 1st last year, do you think were flying in domestic planes in the US?
2 million.
Yeah, perfect. Very close. That's 2.5 million, give or take. Like I said, we won't get into specific numbers here. So this year, I think what somebody estimated is like 150,000.
Wow.
So 2.5 million, 150,000. And the way I was rationalizing that was, I'm like, okay, well, it can't get any worse than this, right? And we were having this chat with, so my wife and I, we talk markets a lot. Yep. So I was telling Gretchen that, can you tell me 150,000? Can't get any worse than that. And Gretchen's first answer to me was, well, what are 150,000 people doing flying? So her thing was like, it should be zero. I mean, why are 150,000 people flying? But anyway, what I'm trying to say is that, okay, and I was trying to debate with her that, okay, look, I mean, as far as loss of demand is concerned, we've gone from 2.5 million to 150. I mean, 150 to zero is not going to make any material difference whatsoever.
Right.
Right? I mean, the material difference has already been made, 2.5 to. So put that context in mind as well as, okay, bulk of the restaurants have been closed down. So any demand destruction that was going to happen, the worst is done.
Okay.
Question is how long does this remain like this?
Right?
The demand destruction is done. So yes, now one can argue that Florida is not closed and so is not closed. I would say that they close that down, it's going to make a blip on the screen from a loss of incremental demand. I think
Right.
bulk of the demand destruction has already happened. That's in the system. So I think that's one thing for us to put in mind. The second thing, which is the most difficult thing for anybody who's going to listen to this talk, is low price. And there is the thing that I would take away is the sooner the price goes down and the faster the price goes down, the less people it hurts.
Okay.
So what that actually means is, so what makes the price go up or down? What makes the price go up or down is price goes down until it finds a buyer. Price goes up until it finds a seller. So in other words, let's think about this, right? Kelsey, you have something you bought for $1,000 yesterday. Doesn't matter what it is. And you want to sell it today. And I offer you a price of 900.
Right.
And you're like, no, I bought it for 1,000. I'm not selling you for 900.
Right.
And you're waiting for a buyer to come and offer you 1,050. There is no 1,050 offer.
No.
Then the next best offer is 950. And then that offer goes away. Then you call me up. Like, hey, are you still good on 900? I'm like, no, Kelsey, I was good on 900 last week. Today I'm good at 600.
Yeah.
So now if you want to sell or you want to get rid of what you have, the price is just gone to 600.
Right.
So in other words, the price is going wherever it needs to go to find liquidity.
Okay.
Right.
Yeah.
And so the sooner, the more faster the price finds liquidity, the less people are hurt. Why? Because now you found a buyer. Now there's a buyer in the market.
Right.
See, if it grinds down 2 cents every day for the next 5 years, you will kill a lot of people in that process, a lot of businesses in that process.
Slowly. Yeah.
Right? Whatever pain has to get taken, if we take it once and get over it and move to the next step, then everything is positive from here, right? Like the point I was making to a co-op I work with in Ireland is that I said, from this point onwards, every one restaurant that opens is going to spark up sentiment significantly in the upside.
Okay.
Right? Because the worst is already done, right?
Yeah.
Worst is done. I'm sitting here with the milk price, May right now, I'm looking at the screen as $12.50. Yeah, something like that. It's so horrible, I don't want to look at it. But it's $12.50. Okay, good. So we're at $12.50. How low does it go from there? Right? And so now if there are buyers in the market, they will show up. You don't have to worry about that. Right? It's just a matter now. So what I'm saying is that the sooner the price goes down, the less people it hurts.
Okay.
This is the hurtful part of it. Right? Now
That's
the question.
Yeah.
Yeah, correct. Right. So what we're solving for now is that. So that's the broad picture about demand, supply, and what's going on. So answering your simple question that you asked is milk demand high, low, or the same. The other thing I'll add to that is there's milk, and then there is commodities.
Okay.
The toilet paper joke here is that we have forests with trees in it everywhere. We have pulp plants that convert trees to paper, and we have no toilet paper in the grocery store, in the store.
Yeah.
Right, and all that happens as well because there's an issue of logistics and moving things around, as well. So we can have surplus milk in certain parts of the country. You may also hear milk's getting dumped because the plants in your neighborhood may be running full.
Okay.
And I would not be surprised if we keep hearing that and the price of cheese goes to $1.80. Because there's some, as we said, grocery stores should be tight.
Right.
Everybody's going to the grocery store to eat. So, we could have these disconnects significantly because, not people are not available to load trucks. I mean, the question I asked one of the co-ops was, how many people do you need to run 3 shifts? What happens if, 25% of the shift calls in sick? Do you cancel a shift? And if you cancel a shift, you have to dump milk, but then the product doesn't get produced and the commodity price goes up in the marketplace because, this is the golden time for grocery stores to sell food.
Right.
They for the first time, I think they won't have to do any promotions to sell food.
Yeah.
Right?
Oh gosh, no, I can't imagine they would.
Right. So in the near term, back to it, in the near term, I think the net demand for milk is not the same as last year, but slightly less. And because of the butter fat demand destruction that we are seeing, and I don't know how long that lasts, right?
Right.
I think so that's the first part of it. Now, the second part of it, which I think is, when we think in terms of, is there a notion of pent up demand in case of dairy commodities? Right. So one argument, and I make to myself, is whatever I didn't eat yesterday, I'm not going to eat 2x today. Right.
Right.
But one thing that I am doing a lot of thinking and calling and polling, and I don't have answers, but I'll pose the question so that next few weeks we can go back and find the answer to that.
Yes.
Yep. Which is when pandemics, and by the way, nobody knows a lot about pandemics. I know nothing about pandemics, so do not take anything I say as any sign of expertise in any pandemics. I just think that whenever there is a big health problem like this, nutrition should be in high demand, because you would want to feed your population and citizens nutrition.
Right.
And when you think in terms of nutrition, the easiest form of nutrition is dairy.
True.
Dried milk, right?
Yep.
So one argument, now when non-fat dry milk last year was $1.20, December, January timeframe. Now, one thing I'll also say that I didn't see this coming. I didn't predict this at all. I did not have any idea that the epidemic would become a pandemic. I was flying to Brazil to work with some soybean farmers on Jan 26th, and I texted my clients, some farmers, basically letting them know that this news of this epidemic in China has come up. I think there'll be some commodity demand destruction because China buys a lot of milk powder from New Zealand. So I think there'll be some demand destruction. There will be some knee-jerk selling. We need to evaluate this market and see if there's an impact on the US. And the question I was asked is, well, do you think there's an impact on the US? And I said, well, if the disease travels here, maybe, but we don't know that yet. I have no idea at that time, right? So I didn't see this coming. I didn't see that at all. Especially the nosedive that everything did at one single go. I did not see that. But having said this, at $1.20 non-fat and $2 cheese, both those commodities are expensive no matter what the economic condition is. Right? So if we go to grocery stores and we pay $1.65 cheese, $2 cheese is really expensive. The cheese price has to correct itself for us to go buy cheese again. Mm-hmm. But that doesn't mean cheese has to come down to $1.20, right? Which is what we're saying. I'm not saying that. What I'm saying is that I did expect the market to come down, but I didn't expect it to come down this much. So at $1.20, I was not constructive non-fat price for simple reason that $1.20 is too expensive. And I had a very minority opinion in the marketplace at that time, because if I looked at the supply-demand balance sheet, which is I study a lot, is I saw a huge amount of demand for non-fat and skim milk and not enough supply. Despite that, I felt that 120 was a very high price because it's a high price.
Right.
Well, it's 86 now. And I would say that the demand for dried dairy or dairy solids in events like this should become even tighter. And this thing needs to move. It should move. It will move. Right. What is impeding its movement is two things. Currency, because all the buyers of non-fat, their revenue is not US dollars. The revenue is the local currency.
Right.
So if the Thai people in Thailand buy it, the Vietnamese buy it, the Malaysians, Indonesians, the Middle Easterners, the Africans, whoever buys non-fat because they need non-fat so they can, have milk and other things they use, their revenue is still in local currency that costs in US dollars. So if US dollars becomes expensive, that just slows down the pace at which they buy. Right? Yeah. And then, of course, then we don't know at the moment what is the condition with the port infrastructure, whether it's open or closed, or maybe it's reduced staff, or things like that. So this will move. It's a matter of when does it move and how much of it does move. Because you see, also the good part in all this is that New Zealand is right now in April. New Zealand has a drought. They are not going to produce any milk. They don't produce any milk during our summers, which is their winters.
Okay.
So commercially, they don't produce any commercially material milk until September this year. So we do have some summer where I think the demand for nutrition, dairy nutrition, I do seriously hope and feel that this non-fat will move because
Okay.
this is bulk food and it goes into other preparations. So milk demand relative to last year, not as much. However, I feel that what connects the milk to each you and me is the commodities that these plants produce, and the plant's capacity has not increased. There are new mozzarella plants, but there aren't new butter plants. There aren't new cheddar plants.
No.
There aren't new drying plants. So if the demand goes up and the plants haven't increased, well, we can only produce what we produced last year. Okay, so that helps put some support on the price side.
Right.
Thank you so much for joining us today, Anup. We really look forward to speaking with you again soon. As a reminder to all of you out there listening, we will be having these discussions weekly to cover topics about the market as they emerge. These times are changing really quickly, so we expect the topics to be very diverse from week to week. Be sure to check back with us.
Thank you for having me. Have a good day.